In our last Morpheus crypto video, we talked about market corrections, and we discussed the difference between a correction by time, also known as a consolidation, and a correction by price, also known as a pullback. Since last week's breakout in Bitcoin, the price action has traded in a tight sideways range near its high, showing a bullish consolidation pattern. In today's video, we look at where Bitcoin may run into its next resistance after it breaks out from its consolidation, and where we may look to find support in case we see a pullback. We'll also take a look at the top relative strength cryptos, which are on our radar for potential buy entry. Be sure to push that like button and subscribe, and let's dive in. On June 20th, Bitcoin had a massive breakout above its 50-day moving average, this red line, as well as a downtrend line that had been in place for the past 2 months. And that high volume breakout was a big technical breakout that enabled the price action to climb all the way back up to test its highs of 2023, which was set back in April, right around the 31,000 mark. So currently, you can see this horizontal line here from the high back in April 14th. That's where Bitcoin is taking a pause, right at that resistance. So that's not surprising because obviously 52-week highs generally do act as resistance. However, the positive is that once the price action breaks above a 52-week high, there's much less resistance in place, so the price can move higher much easier. Based on a tight consolidation at the highs, combined with lighter volume during the consolidation, we do believe that we will soon see a breakout in Bitcoin to a new swing high and a new high of 2023. Notice below here, we've got the 10-day moving average, this green line, rising up to provide support. Remember, we talked about a correction by time, which is a consolidation, and we said that when the price moves sideways, it enables moving averages to rise up and provide support. We also said that a consolidation is more bullish than a pullback because it means that the sellers are not stepping in as soon as the buyers take a rest. So if we do see any type of a pullback in Bitcoin, first we'd expect the 10-day MA to act as support. Currently, that's right around the 29,400 level. And if that level was violated, then we'd want to see some support. Definitely want to find some support right around 28,400, which was the prior swing highs from late May. Remember that a prior level of resistance becomes the new level of support after the resistance is broken. Now, based on what we're seeing currently, we may not see much of a pullback. We may just continue to see a correction by time. And we've been consolidating now for a week. And generally, when you get a big breakout, we see consolidations for anywhere from 2 to 5 weeks before they break out to new highs. But in crypto, it's very dynamic and things can happen faster. So we do need to be prepared for a potential breakout in Bitcoin any day now. So let's go ahead and zoom out to the weekly chart to see where we might find resistance. Okay, zooming out to the weekly chart of Bitcoin gives us a bigger picture perspective of what's really happening. And we can see here very clearly, zooming out from last week, we had the breakout above that 2-month downtrend line from the 2023 high. So it's a nice clean breakout there. And also that correlated to a move back above the 10 and 20 week moving averages. So that's key. Now, as I mentioned, we have to get first above the high of April 2023, above the 31,000 mark, which is this horizontal line right here. But as soon as we break out above this current consolidation, which may happen any day, then we could expect to see Bitcoin quickly advance to its next major resistance level between the 34,000 to 36,000 range. We'll probably have a significant stop around the 34,000 mark because notice from back here in basically early 2022, we had prior lows from March and April that will now act as resistance. Remember, a prior support level will act as resistance after the support is broken. So we should expect to have a pause right around the 34,000 mark. Although if volume is strong and momentum is bullish, then we may actually continue all the way up to the 36,000 mark, around the 36,000 level before stalling. Now, what's significant about 36,000 is that it's a Fibonacci retracement level on multiple time frames, so that could act as resistance. So again, that's about a 12% advance here between the current price and the 34,000 mark. So we've already bought Bitcoin on the pullback right after it broke out. In Morpheus Crypto, we're long from 29,580. So we've already got a 5% gain in our Bitcoin position, and we're looking for at least another 12% or so here if we get follow through on the breakout And at that point, we would look to sell into strength and lock in profits, as well as raise our stop higher. So Bitcoin looking real solid on multiple time frames, and clear sailing once we get above this 31,000 mark. Since last week's Bitcoin breakout, the altcoin market has also been coming back to life, as evidenced by the strength that we're seeing in Ethereum. Notice that Ethereum, just like Bitcoin, has been consolidating in a tight sideways range over the past week, and the 10-day moving average is rising up to provide support. So we've got a little bit of a shakeout yesterday where the price action did dip below the lows of the week-long consolidation. Now, when we have a winning trade, we like to highlight what we did right. Well, we have losing trades too. And when we have a losing trade, it's good to always assess and analyze what could have been done differently. And with Ethereum, we stopped out yesterday because our stop was a bit too tight. On further analysis, we should have given a little bit more room below this range for a potential shakeout. But that's okay, because often when stops get run, we get a valid reentry point, which is much lower risk once momentum is in our favor. So not a problem. And we continue to hold Bitcoin and several other winning positions. Now, Ethereum, we're looking for around the 1922 level is a key test of resistance. You can see here from back in May and June of this year is where that's the price level where Ethereum stalled. And when it tried to break out last week, this is again where the price action stalled, is at right at that level. So that's a key level of horizontal price resistance. So if we can get above the highs of this consolidation, which is basically if we can get above, let's say 1940 rather, then we could see a quick move all the way up to the test of prior highs from May, back just over above the 2000 level, like 2020. So it's pretty much a clear sailing for about a 100-point move once we get above that range. But there is more resistance than on the Bitcoin chart. And that's the bottom line, because the altcoin market was moving a little bit out of sync. We had some relative weakness due to the SEC news, but the altcoin market has bounced back impressively, and we'll continue to keep an eye on Ethereum for a potential re-entry. Now, let's dive into the top relative strength cryptos that are on our radar right now, both recent entries that we'll review, as well as some new setups that are showing emerging relative strength for potential buy entry in the coming days. STX was a leader on June 20th when Bitcoin had its massive breakout. STX was one of the only altcoins that kept pace with the massive Bitcoin breakout, and in fact rallied from a price of 60 cents all the way up to almost 90 cents, nearly a 50% gain in just nearly 3 days. So quite a massive breakout. And as our members know, we don't chase breakouts. If we don't get the initial breakout, we wait for a pullback entry that gives us a lower risk entry point. And when we've got a high volume breakout above a key resistance level, like we did with STX above the 50-day MA, typically the first pullback to the 10-day moving average provides a lower risk entry point. And you can see here, this green line's a 10-day moving average. And just today, the price of STX undercut that 10-day MA, which is a positive thing because it runs stops and absorbs supply. And now it's trying to form a bullish reversal pattern. So if STX gets back above the 75-cent level, basically above today's high, we could see a resumption of this breakout that we saw last week and a quick run back up to at least test the prior highs. We're currently long in the Morpheus crypto service. We bought STX on the pullback, and we're holding this in anticipation of a test of the prior highs, where we'll look to sell part of the position into strength to lock in profits, and then continue to hold the rest of the position depending on the price action and momentum. For top relative strength cryptos, what we're looking for is those that are trading above their 10, 20, and 50-day moving averages, and especially those that broke out on big volume when the rest of the market broke out last week. And Ant is another one of those setups that broke out above, ahead of the market, broke out above key resistance to a new swing high, even before Bitcoin broke out, a couple of days before Bitcoin broke out. And then since then, Ant has been on a pullback, and just right now currently undercutting the 10-day MA with key support of the rising 20-day MA and prior highs right below. So this is a nice setup for swing entry. Again, because it is high volume breakout, we will most likely see a resumption of the uptrend as long as this low holds right here on the current pullback. SFP is a similar setup to Ant, Again, just like Ant, SFP broke out several days ahead of Bitcoin on massive volume. You can see this huge volume spike, and that's really important because volume is the gasoline that powers market breakouts, and that's what we're looking for when we see breakouts. So SFP had a big volume breakout here above its 50-day moving average, and then over the past week, it's been in a slight pullback and now a tight sideways price consolidation just below the 10-day moving average. So if SFP gets back above the 47.5 level, right around here above this horizontal line, we could definitely see a resumption of this bullish momentum that we saw last week. So keep an eye on SFP for a potential swing trade entry above that 47.5 level as well. On June 25th, large cap DeFi plays such as AAVE and COMP broke out on massive volume. Look here what happened that day. COMP rallied from $30 all the way up to an intraday high of $44. So almost a 50% gain just in one day. Now, again, we don't chase the price, but we patiently wait for pullbacks. And the very next day, we got a pullback to a low risk entry point. And let's go ahead and zoom into the 4-hour chart so we can show you that entry point. On this 4-hour chart, you can see that that big advance that comp had last week was all really in the course of one 4-hour bar. And then we waited for the first pullback to the 10 MA. As we often remind members in the chat room, the first touch of the 10 MA on the 4-hour chart after a big breakout often provides a relatively low risk entry point. And that was our entry point yesterday. We actually scooped this up. We sent a trade alert to members right around 36.5 mark when the price was pulled back right to this 10 MA, and the price didn't go much below our entry. And now it's already the very next day showing a 12% gain. This is the magic of pullback buying, is that you can be in the money on your trade nearly as soon as the momentum reverses back up, as opposed to chasing a breakout and then sitting through the anxiety of a pullback and just waiting to come back to break even. So patience is really key in swing trading, and this is one of the key elements of the Morpheus swing trading strategy, is waiting for the proper entry point that gives you a high risk reward. And that's what we definitely have with comp. So comp looking great here. And again, we are looking for a test of this prior high right around the 43 level. We'll look to take some profit, sell partial position into strength, and we'll continue to monitor the price action and volume to trail a stop higher on the rest of the position. FET is a leader in the AI sector, which was a very strong sector throughout the year. And this is not our typical relative strength play because, as I mentioned, we're looking for cryptos that are trading above their 10, 20, and 50-day moving averages, whereas FET is still below its 50-day moving average, this red line. However, in addition to relative strength setups, we also trade technical patterns as well. And FET, because of the coiling price action we're seeing here, along with the strong volume last week, what we anticipate here is a quick pop up to this downtrend line. You can see here this downtrend line is resistance from the highs going all the way back to last year. And if we get a pop above the 2-day high, basically above the 23.5 level, then FET will move above the 50-day MA, yesterday's high, and could be good for about a 20% gain all the way up to this downtrend line. So we've got a solid risk reward because we've got about 20% profit target, and we can put our stop tightly right below the low of the breakout day. So keep an eye on FET, a nice setup. If we do spot a low risk entry point in this, we will definitely send a trade alert to Morpheus Crypto members with our entry price and our stop. We hope you've enjoyed today's Morpheus Crypto video. Be sure to head on over to morpheustrading.com to find out more about our crypto services, and we'll see you in our next video.